Great. Good evening, everyone, and welcome to the special meeting of the Finance Committee of the City of Lancaster for Tuesday, October 25th. Mr. Harris, if you could please do the roll call of members.
Certainly. Mr. Arroyo.
Here.
Ms. Baquet.
Aye. Or here, sorry.
Mr. Cleese. Ms. Gregg.
Here.
Ms. Diaz.
Here.
Ms. Walsh. And President Smith-Waddell.
Here.
All right, thank you very much. This evening's Finance Committee meeting is to review a presentation of the audit of 2021. This evening, we're joined by Jen Kruger-Keeby of Mayor Dussel, who performed our audit, who's going to be sharing her presentation with us. And we have Patrick Hopkins, the Administrative Director for the city, and Von Wynn, the Deputy Director, with us as well, so they can answer any questions. I'll turn it over to you, Jen. Thank you for being here.
Yeah, thank you. Good evening, everyone. So the financial presentation that I have on the screen and hopefully in front of you, similar to the previous year. So the first slide on slide 2 is discusses our responsibilities as the city's independent auditors. Our responsibilities for the generally accepted auditing standards, so that's the regular financial statement audit. And because the city, as every year, expends more than $750,000 of federal funding, we have to perform that additional single audit where we choose a couple major programs, and there's a slide telling you which major programs that we tested. So we do additional compliance work and additional internal control work over those federal programs, and that has to be performed in accordance with our government auditing standards and uniform guidance, similar to the previous years. And our responsibility as your auditors is to express an opinion in accordance with the standards, and the financial statements themselves are the responsibility of management and council. And in planning and performing our audit, we do consider internal control in order to assist with coming up with our audit procedures and performing a risk assessment, but we do not opine on the effectiveness of internal controls. And there's also separate component units that are included in the city's financial statements. There are a total of 7 component units included. One of them we audit, the other 6, which are listed on the slide, we do not audit. But what we do is we receive their independent auditor's report, and we rely on that in order to place them into the financial statements. And there are a couple of those component units that do not get that separate government auditing standards. That's only required if a funder would require that, or they have to have that separate single audit. So it does not cause any concern that those component units do not have government auditing standards. We just have to include that in our audit opinion. Now, this slide and the next one summarizes our communication that we're required to have with those charged with governance. This is also in the form of a communication letter. These are also the same communications that we provided as part of the prior year. So for 2021, there were no new significant changes in accounting policies and procedures that we have to report to council. The application was consistent with the previous year. There were no new standards that the city had to adopt. The transactions entered into, there were no transactions where there was a lack of authoritative guidance, and all the financial information was recognized in the correct fiscal period. There are certain accounting estimates that are integral part of the financial statements that's prepared by management, and that's based upon experience in past and current events, and as well as assumptions as future events. And those accounting estimates that are deemed significant are listed on this slide. So we do review them in accordance with our audit, and we didn't find any issues regarding those estimates. We're just required to let you know that those accounting estimates were present within the audit. And the significant disclosure that we wanted to call to your attention, similar to previous years, is there's a negative unrestricted net position of proprietary funds in one of the special revenue funds. And it's disclosed in note 21, so that is a significant disclosure. And we did not come across any difficulties in working with management as part of our audit. Patrick and Von were a pleasure to work with. Some of the information there was a little bit of a delay in the beginning, which put us back just a little bit, but we were able to complete the audit and have it filed by the 9/30 deadline for Emma. And the next line continues our required communications. Our professional standards require us to accumulate all known and likely misstatements and collectively assess whether they are material, and any adjustments we did propose to management, they were corrected in accordance with our recommendations. There were some material entries that we did propose as part of our audit procedures and that were reviewed and approved by management that I'll cover on a next slide in a couple minutes. We did not have any disagreements with management as far as completing our audit procedures. There were certain representations that management provided in the form of a representation letter in order for us to issue the financial statements. We're not aware of any consultation with other independent accountants where it would be the city trying to obtain a second level of opinion. We're not aware of such consultations. And as part of our audit, we do discuss certain matters prior to retention. However, those communications are not contingent upon our relationship as your auditors. And in accordance with the Government Accounting Standards Board, that's GASB, and that's what the city has to abide by for the financial statements. They require certain supplementary information that's included in the report, which I'll highlight on the next slide. So the results of the audit at the financial statement side, we gave an unmodified opinion. It is the best opinion that the city can receive, where we stated that the financial statements were presented fairly in all material respects in accordance with the generally accounted auditing standards. It's GAAP. And we also just explained in there those separate component units that we do not audit, but we do rely on the other independent auditors. And if you're looking at the opinion and comparing it to prior year, just wanted to point out the format of the opinion itself changed, and it's only because there was changes in our auditing standards. So it made the opinion more user-friendly. It brought the opinion up front and included some additional wording in management's responsibilities as well as our responsibility as your auditor. And one thing I wanted to point out is there's wording talking about going concern. All it does is define what a going concern is and the management's responsibilities to assess, as well as our responsibilities to audit that. That's standard wording. So the city does not have any going concern issues. I just wanted to bring that to your attention. It's additional wording that you'll see in this opinion and going forward. That's just required in accordance with our standards. And I mentioned GASB requires several pages of information, what we call required supplementary information. There's a management discussion analysis in the beginning of the financial statements, and that's written by management, providing any significant highlights, and it gives a very good overview of the financial statements. It helps the reader understand what the financial statements are presenting, as well as providing financial highlights. I always recommend users of the financial statements to review that. That information is unaudited, and there is historical pension and OPEB. OPEB is other post-employment benefits. There's multiple pages that are required. GASB requires historical 10 years of information to include that. And there's also budgetary comparison information for general fund that's included. So what we do is we do very limited procedures and we do not opine on them, but we do review to make sure that it's consistent with the financial statements themselves. There's also supplementary information. So I mentioned the city underwent a single audit, that uniform guidance, because the city expended $750,000. There's a separate schedule called a Schedule of Expenditures of Federal Awards, and it lists all of your federal grants, the total amount that was expended. That is included in supplementary information. So what we do is we do certain extended procedures. We make sure that that information is materially correct in accordance with the financial statement. So we do give what's called an in relation to opinion. And there is one last supplementary information schedule that's included, well, a couple of them regarding the sewer fund, similar to previous year, and that information is unaudited. And for those certain component units, they're not in accordance with the government auditing standards, as I listed before. The next series of slides provide some financial highlights of 2021, as well as for the previous 4 years. Now, the governmental activities, this is all your general fund. It includes your debt service fund, your special revenue funds, your capital projects funds, but it's on the accrual basis of accounting. So what that means is it includes debt as liabilities and includes capital assets as assets. So your change in net position, essentially this is your net income for the year on their accrual basis of accounting was $3 million in comparison to $4.4 million. And you can see there was a significant increase in your revenues on their accrual basis, and expenses, minimal impact. That did include the transfer out. Now, for the revenues, that significant increase, majority of it was ARPA for the revenue loss that the general fund utilized for general government services, as well there is a large increase in tax revenue. We saw EIT, LST was increasing across the board, and also real estate taxes. We've seen a lot of our municipalities and cities recovering from the pandemic and seeing those large fluctuations. So that contributed to those increases. The next slide is the historical graph showing your government activities, revenues, and expenses. And as I said, this is on the full accrual basis of accounting. And this is presented on the statement of activities, and you can look at the statement of activities within the financial statement report, and it shows by program the revenues that came in as well as the expenses. This next slide shows the net position by 3 different types of categories. Net position is essentially your equity of all those governmental funds. Now, as you can see, total net position is negative by negative 138.6. The reason for that is because GASB requires the city to have an actuarial valuation of that the net pension liability for all your pension plans, as well as other post-employment benefit plans. So that, very much similar to other cities and other counties and school districts, fill in the blank for any municipality, that's what's driving that negative net position. Once again, that's on the full accrual basis. But the 3 categories that are required in accordance with the GASB is net investment and capital assets. So that was 29% of your total equity. 4% is restricted, and that's restricted from external parties. And the remaining is unrestricted.
Jen, can you just talk about that difference between 2017 and 2018? About
Yes.
why that?
Yes, thank you. So I mentioned the OPEB and the pension actuarial reports. So that is actuarially assessed as a significant estimate based upon one point in time, as of 12/31/2021. And the actuarial uses different assumptions. Everything's disclosed in the financial statements. But because 2021 had a significant market rebound, it decreased those liabilities, and that's why you're seeing an increase in your total net equity.
And then the difference between 2017 and 2018 was driven by a change in the rules, not the actual liability. Right?
Yes, thank you, Patrick. 2018 was the first year that the city had to present that OPEB liability. And that's when all the cities had to implement that new standard. And this slide is a financial highlights for your business type activities on the full accrual. So this is your water, sewer, stormwater, trash funds in total. And the total change in net position is your equity for all of those funds, and that was a $3.5 million increase. And your revenues increase, and expenses were pretty stagnant. Of course, that includes any transfers out. The charges for services did increase from the prior year. There were a lot of it's attributable to recovery from the pandemic. So there were larger payments coming in for 2021, as well as the rate increase. Probably 1/4 of it impacted revenue in 2021 based upon the timing of the cycles and the timing of when the rate increase took place in 2020. And similar to the governmental activities, this is a graphical analysis of your revenue and expenses for all of those funds. And that is, all the numbers are included in your statement of activities, but you can see that significant increase in the revenue for 2021. And the next slide is the categories of the net position, and this is the total equity for all your business type activities, broken out between the 3 required categories: the net investment and capital assets. So that is all of the capital assets for the enterprise activities, offset by the debt related to that. So that was 135% of the total net position. 5% of it is restricted from outside sources, and negative 41% is unrestricted. And similar to the governmental activities, you can see the bottom green part is the negative unrestricted 2017. The OPEB was not recorded as a liability, but 2018 it was. And this is financial highlights of just your general fund. So the city's chief operating fund is your general fund, and this is on the same basis as what the city budgets. So this does not include debt, this does not include your capital assets. Total Net income for the fund was $1.4 million increase, so that increased your fund balance. And I mentioned there was a large increase in the tax revenue coming in, as well as the ARPA revenue replacement assisted with that. The revenues and other financing sources increased significantly in 2021, and expenditures increased as well. And on the budget side, which is not included on this slide, so the city did budget for 2021 to have a loss of approximately $5 million, but you can see because the ARPA revenue replacement and the unexpected increase in tax revenue ended up with a net income during the year. And this slide just shows the different categories of the general fund balance, the chief operating fund, broken up between non-spendable. That means it cannot be spent. Assigned that's the blue, and that is internally decided what the fund balance is going to be set aside for, and the financial statements further discuss that. So what has been assigned, 69% of your total fund balance for the upcoming budget, medical insurance claims, debt service, and excess workers' comp expenditures. And the remaining is unassigned, which is 29%, and that is available for future spending. And this slide just shows the revenue and the expense for the general fund. It does not include any transfers or other financing sources and uses. And the next slide, it's very pretty fall colors. This is all of your governmental funds. So not only does this include your general fund, it includes all of your grant funds, it includes your capital projects funds, and it shows the types of revenue that are coming into the city. And by far, of course, tax revenue is your number one revenue source. And you can see that large increase in intergovernmental revenue, so that's because of the ARPA. And likewise, here's a governmental funds expenditure mix, just similar to any other city or a lot of other municipalities. Public safety is your number one driving expenditure, and this is general fund as well as all of your special revenue funds as well. And I wanted to point out debt service. You see there's a large increase there. In 2021, there were multiple refundings that took place. The city took advantage of the good market activity in order to lower interest rates and spread out the debt service payments and some future debt savings. That's why you're seeing that expense. And same thing in 2019. Now, I mentioned on the single audit side, so this is where we performed the additional compliance and internal control work. We did have, because we had material adjustments that were proposed to other post-employment benefits, we proposed a journal entry to sewer fund transfer out, internal service fund claims payable, and some capital assets. Because the dollar amount, that's why we have to report that as a material weakness. Now, those journal entries were reviewed and approved by management, so the financial statements that you have include these entries, and management has taken corrective action going forward to ensure that there are adequate safeguards to make sure that the financial information is reviewed before it's provided to us. And the federal program, so we tested 5 major programs as part of the 2021 single audit. What you see on the screen are the formal program, that's the formal titles, but we tested HOME, ESG, so that's the homeless shelter grants. We tested the PennVest funding. We tested the large PennDOT grant, and of course, ARPA. So we tested, so what that means is the federal government has what's called a compliance supplement. They put it out there, they tell us what we need to test. So we gain an understanding of internal controls and procedures for all 5 of those funding sources, and we design tests of compliance and control. So, and our conclusion is we had no issues as part of that testing, so we gave an unmodified opinion on the federal programs where we stated that the city was in compliance in accordance with those federal agreements, material compliance. And as part of our audit, we do gain an understanding of the city's internal controls. We do not opine on them, but if we do come across any best practice recommendations, we include those in the form of a management letter, and that was a separate letter that was addressed to the council. One of the comments that is a repeat comment. It's just recommending that reimbursements are recorded in accordance with the GASB as opposed to how they are. It doesn't materially impact the financial statements. And the next best practice recommendation recommendation was documentation of subrecipient payments over the ESG program. We did not identify any compliance issues, but sometimes there's a lag of when the information, those reimbursement requests are received from the homeless shelters, which are your subrecipients. And sometimes there's a little bit of back and forth. So we just recommended formal documentation of when the initial reimbursement was received and when the final documentation, because sometimes the city might not get everything that's needed in order to issue that check. So, and new accounting standards, GASB's busy. Just joking off the record. They probably need hobbies, but GASB keeps coming out with new standards, so they're at 101 now. The biggest one that's going to impact the city will be for 2022, and that is for the leases. So what that means is effective January 1st, 2022, every agreement that meets the definition of a lease, so think of cars, think of potential buildings, fax machines, postage meters, fill in a blank, the city has to calculate a net present value of that and record it as an asset and a liability in the financial statements. A lot of the cars and the capital leases are already recorded, so that's not a big deal. So it's everything else that's not captured. So we just recommend that management assess all the agreements that are applicable for that time period and calculate that value. From an auditor perspective, we're just concerned about what's materially correct. But we can work with management on implementing that for the 2022 audit, and we also have templates that we can provide as well. Just wanted to let you know that next year's financial statements will be impacted by that. And the other ones shouldn't have large impact coming forward, but just the GASB 87 for 2022. And that's all that I had. Did anybody have any questions over what I presented or anything else regarding the audit?
I had one. You mentioned that from a reporting standpoint with ARPA funds and other funds that we've received, that the accounting practices look good, everything, seems correct there. Does receiving ARPA funds or even assistance funds into, say, like our water fund affect us in any way, our financial position, any differently than regular revenue would affect us?
Not necessarily. So what we're concerned about as part of the audit is making sure that the city is spending it in accordance with the requirements. So we didn't see an issue regarding that. And then there is a separate revenue loss calculation that the city calculates in order to utilize that for the general services.
Got it. Thank you. Questions from the committee or the rest of council? From the mayor?
Just to say that I think where the revenue funds and how we're using particularly ARPA funds comes into play is in relation to our bond rating. And so we did have a new issuance of our bond rating. Is that what you call it? An issuance, a review?
Yeah, credit opinion is what.
Yes. And so we've been reaffirmed at the same level with a negative outlook. And that negative outlook should not come as any surprise because looking out 5 years, every year, for a very long time, the city has had a negative outlook. And we are going to get into a lot more of that discussion as it relates to the budget and some of our financial forecasting work that we're doing with PFM as we go into November and December.
Just to add on there, because the mayor brought up Moody's, I mean, in the rating call that I had with Moody's several weeks ago, and they had said this last year when we went through the refinancing and also got a credit opinion issued then, they basically ignore ARPA revenues in terms of, looking at the city's bond rating because it was, seen as a one-time influx of dollars that every municipality essentially was eligible for in one way or another. So they're not going to give us credit for that. Part of the negative outlook piece was, okay, so now you're relying on ARPA and that money is going to run out. And so what are you planning to do when the money runs out? So in a way, we got no credit benefit for having ARPA dollars, but we get a little bit of a trust but verify kind of issue with the negative outlook because they want to see that the city has not just a plan, but over the period of years is actually going to put the plan into play to avoid the fiscal cliff that's essentially created by having ARPA dollars available.
Thank you for that context. Any other questions?
Just to say thank you. I've been sitting through these audit presentations for a number of years now, and I appreciate Patrick and Vaughn and your team, Vaughn, for the work that they do every day to make sure that we get this right. And as we are taking in more and more grant funds, more contracts that come with that, setting up new systems, and this might be a good time to just tell council about the upgrade to Munis.
So exciting.
So
It's an
exciting.
time that we're going
Let me
through.
just say, it is very exciting. It's going to help with a lot of the grants administration
Yes.
because we're
So-
implementing some new modules.
Yeah, so we are a combination of Friday and really more on Monday going through, it's a pretty significant upgrade or update to the enterprise system that we use, Munis, that we use for all of our financials, all of our water, sewer, solid waste and recycling billing, all of our housing inspection work, a whole host of different things that the city does. It's the first major update that we've done since 2018, I believe it was. We had planned to implement an update to it in 2020, and then a couple of other things happened. And now it's been a bit of a pain point going through the upgrade because Tyler, which is the software company that owns Munis, they have several hundred clients who, of course, were in the same position as us, and so they're all going through upgrades over a period of 6 to 18 months, and it's been a challenge. But we will get through that, and Tuesday morning, everybody will walk in and we'll have a new version of Munis to operate with. But as the mayor mentioned, there's a grants module that Tina Campbell and Jen Orantes have been working with accounting staff to get it set up that will make it significantly easier for everybody to track the grants that we have in one place, have everybody who needs to have access to the documents and the financials and everything will have them. And that's going to be a major benefit to everybody, especially as Jen and Tina are working their tails off to get additional grants. The $30.5 million of grant dollars under management right now, and about an equivalent amount of applications in. So, and that ties back to this audit because strangely enough, grantors want to see that we're doing well with our dollars and making sure that we're, tracking dollars correctly and spending dollars correctly.
Yeah, given how important that is and how it could affect an audit and how having a good audit is important to our financial future, it all it's good. Glad that it's happening.
Yes.
Anyone else before the Finance Committee adjourns? All right, then that concludes our special meeting.
Thank you.
Thank you very much.